and the IRS has a list, they're going to slap you down.
Is it a slam dunk? No. And the IRS has come out point blank and said, we don't agree.
Did you know that with the right legal and tax strategy, some cannabis operators may be able to avoid paying 280E at all? I'm Jason Reposa. After 25 years in tech and cannabis, I host High Functioning to show what actually works. Today's guests are Jesse Alderman, partner and co-chair of the cannabis practice at Foley Hoag, and Ray Owens, tax lead in the cannabis practice at Withum. They advise hundreds of cannabis companies on opinion letters, IRS audits, rescheduling risk, and how far is too far when it comes to pushing the 280E opinion. We get into Schedule 3 timing, what an opinion letter actually does, when the IRS pushes back, and how operators are getting this wrong.
If you lose that audit, the IRS can then throw an additional 20% at you.
This is Real Strategy Over Hype. Well, let's dive in. Chew, wait, hope. Hard pass. Pocket uses micro and nano-emulsification, so effects show up in about a quarter hour. It's the gummy experience without the gummy lag. Pocket your chill and keep moving.
My name is Jesse Alderman. I'm a partner at the law firm of Foley Hoag, and I'm the co-chair and founder of our cannabis practice.
My name is Ray Owens. I'm one of the tax leads at Withum in our cannabis practice, focusing primarily on tax structuring, consulting, and compliance.
So how many of your clients that you work with are in cannabis, like percentage-wise? Like, are you like 50-50 non-cannabis cannabis clients, or are you like all cannabis all day?
So there's been years where I've been close to 100% all cannabis. I started out as a regulatory specialist, actually, with gaming companies and casinos, fantasy sports, brick and mortar casinos, and the parallels between, and I'm a regulatory guy. Foley Hoag has a full service cannabis practice. We're a 375 lawyer law firm. So we have M&A specialists, tax, public companies, real estate, IP, you name it. We cover it. And those attorneys within our practice areas, within our specialties, do serve cannabis clients. We've represented probably at any given time 200, 300 total cannabis clients, maybe more.
But today, right now,
right,
50-50 or?
Probably 75, 80% of the work I do is cannabis. I do a fair amount of regulatory and permitting work for other highly regulated industries like renewable energy, gaming, and those types of industries. But cannabis is well over 3/4, if not, upwards of 90% of what I do.
Wow. How about you, Ray?
So me personally, I'm maybe at 95%.
Wow.
I was in-house at a cannabis company before coming back to public accounting.
Could you name the name or?
Yeah, I mean, it's all over my LinkedIn and stuff. So I was at Jushi for about a year and a half.
Okay.
And when I decided to come back to public accounting, the whole gig was I wanted to take all that acquired knowledge and really try and use it for the benefit of everyone else. So the company has primarily deployed me, and I've primarily tried to be deployed into mostly just cannabis. Optimistic, going to try and hope for some other alternative medicines coming up as some other things become popular.
Psychedelics, mushrooms.
I would love to see what happens with those industries. I went to MJ Biz, built the Remind track recently to see if that was something that was really coming. Sounds like it is, but as of today, we have over 200 clients, and I'm about 95% cannabis.
Wow. So feel free to answer this or not. Do you guys consume?
Like right now?
Do you guys? It could be. I mean, I don't think anybody's going to hold it against you if you say you don't. I was just curious.
Absolutely. Yeah, absolutely not. It's funny that you said if you don't. I thought you might say if you do. But I do think
you can't trust a skinny waiter though. So
I rarely consume cannabis these days. Not for any other reason than I'm a full-time partner at a law firm and a father of 2 young daughters, and I'm just always tired.
Same. I mean, I got the 3 young daughters. One of them's 7 months old. I can't imagine being a little bit baked at 2 a.m. and having to go get a bottle. Like you just be rough.
Oh yeah, that must be.
So maybe in a couple of years when I have that, like Jesse, we can have a little bit more space to relax. But here and there, I like to try new products that my clients come out with just to give it a little taste. But still have a couple beers.
Yeah, I was gonna say maybe would you get past the diaper stage a bit?
looking forward to.
Once you're clear out of the diaper stage, then it's just like, all right, well, I have to wake up 2 o'clock in the morning, change a diaper.
Absolutely.
So if you had to bet real money, I guess, today, is cannabis actually getting Schedule 3 in 2026?
I want to say yes.
I want it to be yes so bad.
Yeah.
It just has to be. I am still concerned, and I saw some articles in the trade press. Cory Booker made a comment to the same effect this morning, Senator Cory Booker from New Jersey. I'm still concerned about the amount of buy-in and legal effort and justification it's going to take for the Drug Enforcement Administration, which is, it's in its DNA to be drug warriors, including against cannabis, reefer madness people, right? That they will, notwithstanding the direction in the executive order to expeditiously complete the rescheduling process, that they will not self-sabotage the hearing process that still has to go on before an administrative law judge at the DEA. But one thing that makes me more optimistic than it when the previous administration published its notice of proposed rulemaking to move cannabis from Schedule 1 to Schedule 3 is that was a end of term lame duck rule with some internal infighting that even became public in the news reporting. One thing about President Trump, love him or hate him, and this is no political commentary one way or the other, when he says do something, they get shit done. So time will tell. I'm optimistic.
Trey, what do you have to say on that one? I mean, you're hopeful, obviously, for personal perspective potentially, or are you talking for professionally also hopeful?
All of the above.
Yeah.
I mean, it'll be best for my clients. I think it'll just be best for the country. We've had these conflicting laws for almost 100 years now. If you think back to the very first anti-cannabis law, you're talking about 1937, right? So it's been a very long road. And the whole time, I think the vast majority of people knew that it wasn't nearly as bad as they said it was. Yeah. So I like the fact that, it's been a couple of years since they started the process. Hopefully they can continue it. I know I've seen some articles, like you mentioned, that say, it could be another 1 to 2 years, if that. Generally, right, President Trump's tell is if he says 2 weeks, then it's not going to happen. So I don't recall him saying 2 weeks now. He put out the executive order. It was almost a little disheartening, the amount that they went after the medical side. So it's almost like they're trying to play just the good side of it, not the bad side of it. Right. I'd love if they were just full-throated advocacy for doing the right thing. But I'm trying to remain optimistic. Yeah.
Is there a part of the DEA rescheduling process that I think that most operators just don't understand? I mean, it's very opaque to me. How does that actually occur in the DEA? You're saying that they could even potentially self-sabotage it because they're supposed to be the drug warriors.
So it's extremely opaque, and it's actually extremely opaque even to administrative lawyers who deal with federal rulemaking on a day-to-day basis because of the peculiarity of the Controlled Substances Act. So without putting you and the audience to sleep, I can try to give a 2-minute overview on it.
Yeah. I'm super curious because I think a lot of people, when they start thinking about we're going to get Schedule 3 or the executive order, when the executive order got signed, that day I was on Instagram being like, fantastic, no 280E, this is going to be amazing. And then somebody corrected me immediately. They were like, it just executive order doesn't mean it's actually a rule yet. Yeah. So, and then I'm like, well, what happens when it become, how does it actually become a rule at that point?
So the way that federal regulation works generally under what's known as the Administrative Procedures Act, which is a federal law passed by Congress, is that an administrative agency, whether it's the Department of Agriculture, the DEA, the EPA, they'll publish a proposed rule and say, this is what we want to do. We want to make this change. And they'll put that in what's called the Federal Register. That has happened here. And under the Controlled Substances Act, as is required, it's happened with scientific and medical justification, which is a huge...
That seems like a big hurdle
and watershed moment, really, that you have the Department of Health and Human Services now under 2 successive administrations saying and endorsing that cannabis has currently accepted medical use and treatment for certain therapeutic benefits, right? So we have done that. The Department of Justice with the DEA, which is under the Department of Justice, has done that. There was under the Biden administration, a proposed rule to move cannabis from Schedule 1 to Schedule 3. What is typical is that there's a notice and comment period of 30, 60, 90 days, whatever the case may be. And then the agency can just publish that final rule, and subject to any court challenge for any illegality or arbitrary and capricious rulemaking, that would then go immediately into effect.
So what you're saying is there's a commentary period for 30, 60, 90. Do we know if it's 30, 60, or 90?
Well, I'm going to get to that because under the Controlled Substances Act, there is a very arcane and seldom used process called formal adjudicatory rulemaking that has to happen for the reclassification or descheduling of a drug.
This is specifically to the CSA.
Specific to the CSA.
Wow.
So what has to happen is instead of just having the agency take all these emails and comments, read them, respond to them, and publish that final rule in the Federal Register, they actually have to hold a court-style hearing and take evidence and testimony from witnesses. And a administrative law judge, which is basically a judge, except not a Article 3 judge who works for a federal court, but a judge who works for the agency itself, must then say, yes, the weight of the evidence supports this rule. I find X, Y, and Z, and the final rule gets published that way.
And you have to wait 30, 60, 90 after that because now it's a commentary period or no?
The commentary period is already closed here.
Okay.
After the commentary period, there's this hearing that has to happen. Most rulemaking doesn't go through this formal hearing. In this case, because of this Controlled Substances Act, this is very unique to the Controlled Substances Act.
Is there a time period, though, they have to have this done in? Or is it just like they could, 10 years from now, they could still be in court?
There's no time period. And in fact, we've seen massive delay, right? What we saw last time was that the administrative law judge and the Drug Enforcement Administration, the allegations were, and if you look at the list of witnesses, this is true, really limited the amount of testimony that they would accept, and was alleged to, and it certainly seems to be the case, that they stacked the deck to take only anti-rescheduling witnesses, those who would say that
there's no medical benefit.
Cannabis has no medical benefit, the rule isn't supported by the evidence, or those who would say that its addictive properties are such that it must be on Schedule 1 or 2. And because there's certain criteria that you have to meet under the definitions of the Controlled Substances Act to be Schedule 1, Schedule 2, Schedule 3, 4, 5, etc. So you saw a very short witness list with all the cannabis interest groups, physicians groups, operators, almost all get excluded from testimony. And then the witnesses that were selected were like the Tennessee State Police.
It was like the governor of Nebraska or something.
Yeah, the governor of Nebraska, right? So everybody, and in fact, advocates sued and said this,
which can also slow down things.
Slowed down tremendously.
Yeah.
So it came to a standstill. And what the executive order hopefully has done is essentially get this back on track, reopen the hearing, have a good faith process going forward to select credible evidence from both, credible witnesses and testimony from both sides, get this damn thing published and be done with it. But to answer your question, there is no trigger that they have to meet by X certain date, other than the fact that the president told them to do this, and I'm quoting, expeditiously, which means fast. Still no word a month later, or how long are we? 6 weeks later?
Well, we were busy in Venezuela.
We were beginning. Yeah,
there's other things we were kind of working on. Now Greenland.
Yeah. So,
Greenland. So how do they feel about cannabis?
The Greenland.
So,
but
sorry, this is just weird dad jokes now.
We're all
green dads.
Yeah, we're all here for it.
So, well, I like to call it just two pros and one curious operator. This is what I've already titled this one because it's just like, you guys are the pros. I'm just super curious. So I'm going to dive down to a bunch of different levels in this one. And I hope it's as entertaining for the audience it is for me. Because I'm already
their dad jokes. Yeah.
So, especially the jokes. So, so just based on those timelines, again, there's no timeline for this part of it, but if Trump says expeditiously, he means fast. And if he doesn't get his way, he might throw a tantrum or something. I don't know. But what happens after that, though, is then the DEA kind of can just publish it and now it's effective. So that's the stage we're on right now. It's basically like we're waiting for this court stuff to just finish. Oh, but then you said there's also legal challenges that can come through still, or no?
Correct.
Some anti-people might be like, hey, we're going to just kind of like pause it in a sense by just throwing lawsuits after it.
So there's a step-by-step process, and it really is bureaucracy on steroids, right? Greenland-sized bureaucracy. So we've had a proposed rule published in the Federal Register. That's still the proposal from the agency. We've had the notice and comment period end. You or I or anybody and their grandmother could submit a letter and say, I like this or I don't like this.
And they were like 90% positive, right?
They were very
like 90%, 95% in favor.
And this is popular, right? I mean, this is a popular change and coming up on midterms elections, but not to digress. So then this hearing has to be held. This hearing has to conclude. The agency then has to decide what to do.
Based on its findings.
Based on its findings, formal findings, publish the final rule. Say we get to that point as the president has directed be done, and the agency publishes a final rule and says we're going from 1 to 3. That could be and probably will be effective somewhat immediately, whether the day it's written, the day it's published in the Federal Register, I should say, or at some 30 days hereafter or something like that. But like anything in America, the bad guys can appeal and take that to court. Now, they could challenge it in court, and one of two things could happen. They could get an injunction that would forbid the agency from the rule from taking effect. That would be bad. Then we'd be stuck in the status quo, and that would also indicate that at least the first court, the court that would hear the appeal in the first instance has determined they're likely to win. I don't think that'll happen. This rule is going to be supported by strong scientific evidence if it goes through the way it's supposed to. Then the rule will be effective, but it would be under appeal, under protest, and we'd have to wait for that to conclude. But it wouldn't be stopped in its tracks.
Right. And so if it goes to that level, because I've also read those articles where it's just like there's a group of people who are going to try to appeal it or whatever, right?
Sure. Kevin Sabat, smart. Sam.
Yep.
Smart approaches to marijuana. Certain elements of the GOP, states or the folks that have petitioned to be witnesses in the rulemaking process now who are against the rule.
So, but when you do this appeal, does it pause it, or does it actually become Schedule 3 and then they're just kind of going to unwind it at that point?
Exactly. So the answer is yes.
Okay.
You asked or. It will be up to the court to determine whether to pause it, whether to issue a stay or an injunction against the rule, or whether to hear the appeal while the rule goes into effect.
Okay. I thought nationwide injunctions weren't a thing anymore. Thought we got rid of this.
A nationwide
or for a district court?
That's a different thing. This is an appeal of an agency rulemaking.
So when you're at that stage and you're actually, so basically, it feels like I think a lot of people are just overstating, operators are overstating like how fast this is all going to happen. It sounds like what's like at the earliest time frame, is this something that could get done in a month, or is it something that's going to take to the end of the year? And that's why obviously my first question was like, is that even happening in 2026?
I think you need a lot of things to happen quickly, right? You need the administrative law judge and the DEA to be assigned. I believe the old one retired. So you need a new ALJ assigned. That judge needs to reopen the hearing. There's some housekeeping that can and should be done in terms of reopening the witness list, scheduling the hearing, scheduling briefing, and then actually holding the hearing. Government moves slow. That is going to take the better part of this year. We still haven't even seen any movement there. I'm hopeful that if they move quick, I mean, when this administration moves quick, it moves quick. So if they want to move this quick, they are not under, just as they're not under a deadline to get it done by a date certain, they're not under any strict restriction on moving it fast.
Right. So they could potentially move as fast as they want at this point.
Yeah.
But they have to prioritize it over everything else that's going on, of course.
Well, the president kind of did that already by directing them to do it
expeditiously, and that's a very key word there. So as far as like operators go, though, does that mean as soon as that actually happens, again, if if it's not an injunction, if it's more just like, hey, this is going to take effect and then there's an appeal, when do we actually get any tax relief? Is that coupled together, or is it like two separate things?
So it's definitely two separate things, and it's a very unique circumstance. So there are actually two separate laws that we're talking about, right? So that's why Jesse was handling a lot of the conversation about the actual CSA part of it, is because that's a criminal law. You know, you're talking about the Controlled Substances Act, you're talking about the criminality of an intoxicating compound, right? Then we have a tax law. The 280E is a tax law. It's a completely separate section of the federal code. So we have that law that refers to the Controlled Substances Act, right? So 280E, for anybody who hasn't been playing along, you know, says more or less you can't deduct ordinary necessary business expenses or take tax credits if you're trafficking in a controlled substance that's within the meaning of a Schedule 1 or 2 of the CSA.
And the clarification here is like not Schedule 3, though.
Not Schedule 3, 4, or 5. Couldn't tell you a single drug that's on 4 or 5, to be honest. One, obviously, being cannabis, but also, you know, fentanyl, heroin, LSD. Schedule 2, and this is your great trivia question, right? Cocaine. Schedule 2, not Schedule 1. And then there's some other subsets of drugs on there, too, that have some accepted medical applicability, but also a high potential for abuse. Then you have Schedule 3, ketamine, Tylenol, codeine, things like that. So that's where you start to say, okay, very real medical use, but also potential to be abused. And that's where they're trying to get it, because if nothing else, it'll allow for a regulatory framework. It'll get you out of that 280E. But how exactly those laws and the changing of those laws are going to interact is subject to some debate. So once the CSA changes, once you go to Schedule 3, 280E is not going anywhere. I don't believe there's any plans of the federal government to change the wording of 280E. And it's also one of the few, like a short list of federal tax code sections that have no regulations. So everything we know about applying 280E to a tax return is based off of court cases and anecdotal stories about IRS audits and things like that, and just common sense to some degree.
Because is 280E literally just like one sentence or
77 words?
77 words.
It is effectively one run-on... Oh, I know that one, yeah. One run-on sentence that has not changed since the early 80s, right? Since the war on drugs. So if they come out and they reschedule, it's a question among academics. Do you take it back to January 1? Do you do it on a cutoff basis? Is it prospective? Is the IRS going to come out and make our lives easy? You know, every time recently there's been a tax law change, you know, 2017, recently with the OBBA, 3Bs, A, they tell you how to do things like deploy the change in depreciation. They tell you, as of a cutoff date, here are the parameters. It would make everybody's life easy if they did that here.
Right.
If they don't do it, then there's potentially some gray area.
Right.
I would argue that whatever the law in effect on the last day of the tax year is, that's probably what I'm going to apply to the tax year, absent other guidance.
Right.
I know that other people educated in these topics are saying, well, maybe it's more conservative to do a cutoff basis.
Right. So you're saying basically if cannabis gets rescheduled from Schedule 1 to Schedule 3, and all that stuff actually happens through the government and bureaucracy and all this other stuff, and all of a sudden the DEA says it's officially Schedule 3, they update the website. That's my trigger. I'm a web geek. Like, they update the website. I see it on the website. I'm like, oh, it's actually Schedule 3. I'm calling you up and be like, hey, all right, this year in total, we're good, is basically what you're saying. Because without any further guidance, it's Schedule 3 as of 2026. So at the end of the year, we basically get the advantage of all of 280E at that point, or not being under 280E.
I think reasonable professionals might be inclined to take that approach. Okay. If for no other reason than the benefit of the client. But you know, it's gray. There's not a black and white answer to that question. Not today.
So what are you seeing now that all this started happening? Because I was kind of one of those pie in the sky kind of like operators being like, all right, because I have been saying like as of the day of the executive order 2025, then it applies for all of 2025. And I was like, obviously people were like, well, it doesn't really work that way. And then I got corrected, of course. But are you seeing some of your clients take like kind of aggressive positions now, or they're being more aggressive to be like, don't worry about it, 280E, it's going to happen in 2026. Ray, can you like just figure it out?
There are certain people who are coming to us, and that's exactly the tone of the conversation to start. And
right,
like you said,
that's what I say.
Right,
figure it out.
Right, we got to remind the clients, right? So the IRS, and I'm sure if you ask them point blank, they'd say we are taking our stance from 24. It's exactly the same in 25. 26, we'll see what happens, right? So, and even a few months back, right, the IRS came out with guidance and said, we've heard of some of these non-280E positions that are becoming very popular in the industry. It's still questionable whether or not that's a reasonable basis, and even disclosing it doesn't necessarily, take off the table the fact that you might have to defend it. So
I want to get into that letter now, because
Sure.
I think it's one of those things that I call it the letter because, again, I'm an operator. I'm not an attorney. I'm not an accountant, of course, or CPA. But like when I think of, so I only recently heard of the letter like last year, really, and so I didn't even know this was a thing. So basically, for the audience who wants to start with it, like who wants to describe what the letter actually is, or what it's called a what?
I'll start because I just can't help but correct that it's a letter.
Okay. You don't print it out and mail it somewhere.
you actually wear it on your chest. There's just a bit.
I'm gonna print it out. If we apply it in 2025, I'm gonna print it out on a T-shirt and be like,
It's a couple of pages. It's going to be a big t-shirt.
Responsible CPAs and responsible taxpayers, if they are going to take a non-280E position on their tax returns, rely on a reasonable basis opinion from a law firm.
it's an opinion.
It's an opinion, not a letter. But let me back up because it's a lot more nuanced than that.
Okay.
Potato.
When I say letter, opinion letter is what I would say.
Opinion letter.
Okay.
And there is a letter involved. So starting in tax year 23 and maybe even before, a lot of operators and
MSOs probably.
MSOs maybe spearheaded this trend, and we certainly knew about it because they have they're public companies who make public filings and disclose what their material tax positions are. And, took the position that 280E doesn't apply to their business. And they amended prior year tax returns and filed current year tax returns without 280E. That saves you, Jason, your company, and every other cannabis company huge money, proportionally huge money. If you're a $1 million dispensary, or if you're a $1 billion MSO, the per capita proportionally, it saves you a massive amount of money.
And this is
not pay 280.
Exactly. And what we're saying for the audience, so any operators listening right now, the idea is that you're basically making it's an opinion letter that says 280E doesn't apply. And you can correct me in a second, but I'm kind of like dumbing it down a little bit.
Let me go over the signing position hierarchy real quick, because I think it's important to know like why this exists.
But I'm trying to make sure that all the operators at the very beginning understand that they have to be paying attention right now to know how this actually works, because we're talking about taking a position that allows them to be treated like a normal business.
Right. And you take that position by not paying 280 to the IRS.
Right. You're pro taxes still, but just not that.
Refiling your returns and asking the IRS to accept those as an amended return, and saying I overpaid and asking for money in the most simplest terms. But the way you do that is this is what is known as an uncertain tax position. And when you file under IRS regulations with an uncertain tax position, you must disclose that to the IRS, and that's on what's called Form 8275, and that includes a small narrative that summarizes the legal position. The reasonable basis opinion letter comes from the fact that the IRS says you can only do this. You can only take an uncertain tax position on your return and not pay based on taking that position if it's supported by at least at the bare minimum a reasonable basis. And there's legal significance to the term reasonable basis, and the law firms that write these opinion letters have analyzed this very diligently and determined that it meets that legal threshold. And there's IRS commentary on that. And in fact, for Foley Hoag, there's an opinion committee that reviews these types of letters made up of lawyers from a variety of specialties, including tax, but not, cannabis lawyers like myself.
Must be a thrilling conversation. They're like, so this word here, and it means like 6 different things.
Yeah, they're in a room with leather-bound books, pipes. So anyway, and one of the benefits of having that reasonable basis, which is documented by this opinion letter, is that it is supposed to and should relieve the taxpayer of an underpayment penalty of 20%. But it doesn't mean get out of jail free, that the IRS is going to accept this position, that
you said it, so now you
you tried hard.
Yeah, you tried hard to get it, so you got it.
Yeah.
Thanks.
All right. So why reasonable basis is significant has to do with who can sign a tax return and submit a tax return, right? And the IRS has put some or the Treasury, when they came up with some of these rules, have put together certain levels of authority, right? So if you have a frivolous tax position, let's start at the bottom. That means you somewhere between 0 to 20% chance that if you get audited, you'll be successful. And the IRS has a list of frivolous tax positions and things that if you try and fight that in tax court, not only will they laugh you out of the room, they're going to slap you down.
What's an example, for instance?
I think one of the greatest examples is people trying to say they're sovereign citizens, that they don't have to pay income taxes. So they will there's been cases where people will literally scratch out the attestation at the bottom of the tax return. They will not sign it and say, oh, well, I didn't really submit it, or any number of, creative solutions.
Right.
So those have always traditionally just gotten thrown out, laughed out of the room. There's a list of them online. You can find them. And generally that's understood professionally to be somewhere between 0 and I guess 19.9% chance of success. Between 20 and about 40 is your reasonable basis threshold. And what that says is, you might litigate, you might have to fight for this, you might lose still, but at least you thought about it, you had a good academic understanding, and you put forth the argument. And to Jesse's point, incumbent in that, especially as a tax preparer like myself, is you need to disclose that on the return. And it's not that it necessarily gets you out of an understatement penalty. If you lose that audit, you may still have to pay the original tax, interest, and penalties for things like, late payment. What it really, tries to get you out of is the IRS can then throw an additional 20% at you.
Mm-hmm.
And that's kind of, an FU, this wasn't necessarily frivolous, but you didn't make a good enough attempt to do the right thing.
So the letter is the attempt.
It's the due diligence. It's saying I relied on a professional. I went to my guys. I paid the law firm for their advice. It's written to me. I can rely upon it. Here you go. Please trust me. Take me at my word that I did the right thing. And if anyone's ever really kind of interested in seeing that play out, if you look at the Harborside case, which a lot of people are familiar with, the IRS attempted to hit D'Angelo and his company out in San Francisco with that 20%. They attempted to say what you did was so wrong, you were just off a ledge, here's an additional 20%. He actually very famously got on the stand and he defended it. As an articulate guy, he went up there and he said, well, no, I used the best wisdom of the time. I relied on the Champ case. I had segregation of these activities. And he actually wound up winning.
Wow.
So you can kind of see that play out in real time for anybody who wants to, do some homework after this.
Is there a YouTube clip that's 30 seconds?
I'm unaware of a YouTube clip.
Sorry. Someone's going to make that. Someone make that right away, because I'm not going through all that. Not sure that U.S. Tax Court has a YouTube channel.
No.
Although maybe they do.
Well, the guy in Providence got pretty famous for it, so maybe that's a thing. I don't know.
But you keep on mentioning the word reasonable basis. What is the reasonable basis? What is the argument, I guess? Is it because the state doesn't have 280E, so therefore does it apply federally? What's the...
There's a couple of them, right?
There's a couple.
So we need one of them.
Yeah, I'll give you the best. I'll give you what I think, in my opinion alone, is the best one. And it's an argument based on what attorneys call a statutory construction argument, which is a nerdy lawyer way of saying the words that are used in the laws that are written. And Section 280...
Think about Bill Clinton arguing about what the definition of the word is. That's basically what you're doing.
That's a throwback. I like it.
And that's...
Definitely, maybe.
So, and it gets down to the usage of different words in the Controlled Substances Act and Section 288, the IRS code. So the Controlled Substances Act was passed, I believe, in 1970, the earlier enacted statute. And it talks about listing or scheduling drugs, right? So cannabis, at the time, determined to be have no currently accepted medical use and treatment and have a high potential for abuse. Because of that definition, it was listed or scheduled or placed on Schedule 1 of the Controlled Substances Act. Fast forward 10 years, you got Miami drug pins that are actually going and hiring people, great CPAs, and taking business deductions for an illegal business.
I always thought that was strange.
That's the origin of 280E.
Wow. Hold on. It's important to note he was from Minnesota.
Did I say, okay, sorry,
Sounds like a Miami thing, but yeah.
No. Jeffrey Edmondson. He's a Minnesota guy. He had some cocaine, some weed, and some methamphetamines, and they audited him. And he hired a good tax attorney.
And he was writing like his printer.
Yeah. He wound up paying $200 to the IRS at the end of the day. And the only thing he lost on is that he couldn't substantiate his business trip to like San Diego, which probably had a lot more to do with just not outing his friends. But yeah.
Right. Well, there you go.
Yeah.
You're an amazing 280E historian.
Oh, I can do this all day.
Cool. The backstory.
I wrote my thesis for my master's on it, and I brought in brownies, so I could eat brownies while I read my thesis. Perfect. My wife did a giant leaf on it, too.
That's awesome. I confess I did not know the backstory of the guy. But in any event, so Congress said, no, if you're trafficking in a controlled one or a controlled two substance, you can't take these ordinary business deductions, right? You're not benefiting at all from the IRS code. But Congress used a different word. It said trafficking and Ray said this earlier with emphasis on the words. He said trafficking in a Schedule 1 or Schedule 2, a substance within the meaning of Schedule 1 or Schedule 2. So what has happened? Well, as early as September of 2023, our federal government said that cannabis has currently accepted medical use and treatment. A drug cannot be within the meaning of Schedule 1. Are you following?
Yeah.
Cannot be within the meaning of Schedule 1, which is a defined term under the Controlled Substances Act, if it has currently accepted medical use and treatment. So at least as early as that date, and, arguably well before, because the studies that the FDA and HHS relied on predate 2023, go back as early as 2015, you have the federal government saying you are not within the definition, within the meaning of Schedule 1, but you're still listed or scheduled there.
Right.
And the lag is obvious. The lag is because there's this really Byzantine process to reschedule a drug that we talked about earlier in the interview. So the argument that we're making, one of statutory construction, one within the meaning of words, is that if Congress intended 280E to apply uniformly to every drug at every point in time that it is listed or scheduled on Schedule 1 or Schedule 2, it would have used the word listed.
Right.
There's a canon, what lawyers call a canon. There's a principle of statutory construction that Congress knows the definition of the words it's using and intends for different terms to have different meaning.
Mm-hmm.
So the argument is that cannabis is no longer within the meaning of Schedule 1 because it does, and we all know that it does have therapeutic medical use, right?
Right.
No longer within the meaning of Schedule 1, even though because of this cockamamie administrative process you have to go through to reschedule a drug, it is still scheduled or listed on the schedule of Schedule 1 controlled substances. So that's the statutory construction argument. It's a compelling argument. Many lawyers think it has a reasonable basis.
Yeah.
Meets that standard we talked about, which has to be more than 20% level of certainty. As Ray said, is it a slam dunk? No. I mean, there's, and the IRS has come out, point blank in press release, information release, and said we don't agree with that argument. But just to see you nodding your head, it kind of passes that relatively low 20% threshold of a reasonable basis.
Yeah, and I'm going to reiterate it really quickly. So cannabis was listed in the 70s as Schedule 1, and then the 280E ruling gets done a decade later.
280 is a statute passed by Congress.
A statute passed by Congress.
83.
Somewhere in the 80s that says that 280E applies to substances or things that have the meaning of Schedule 1 or Schedule 2. And since the Schedule 1 meaning has no medical benefit, in 2015, whatever, when medical studies came out that said there is a benefit, it no longer met the definition of having a meaning of Schedule 1 at that point.
More or less, yes.
Okay.
Yeah,
I butchered some of them.
No, I think that's right. I mean, there's so much nuance here, and
Right.
because
bureaucracy, it takes so long to change anything. And 280E basically says that, like, basically is the reasonable basis is like, well, instead of waiting for that entire process, it no longer fits the meaning of it, so therefore 280 doesn't apply.
Right. I mean, the most compelling part of the argument is this principle that when Congress uses different terms, those are supposed to be supplied different meaning.
Yes.
I'm sure Congress certainly assumed to be aware of the words it used in 1970 in passing the Controlled Substances Act 13 years later when it passes 280E.
They should know what they are talking about.
So just to tie it with a neat bow, hopefully, if there is that reasonable basis that 280E doesn't apply today, that is why you see so many, and honestly, so many cannabis companies taking a position even before rescheduling that they don't have to pay 280E.
Now, so in the grand scheme of things of like the levels of different operators, whether it's like a person who's running a grow in like 1,000 square feet, they're licensed and everything, all the way up to like the full-on MSOs, vertically integrated across multiple states. Like, is it something that eventually trickles down to the smaller operators and they find out about it, kind of like how we did, or is it something that like you see all different types of people coming to with this new knowledge?
It's all types of people, and there were really two types of people in the beginning who came. It was either the gunslingers who just thought it was right and wanted to do it, and 280E has been rolling the whole time. And then it's people who got a little bit backed into a corner, right? So you had the smaller operators who probably started out doing everything correctly and they were going bankrupt. And they said, this is, maybe this is a 20% chance of success, but like this is a lifeline when I'm struggling to keep my head above water. So, in late 23, early 24, when we first started fielding calls, it was really two types of people. And I think, even last year, maybe something like 20% of our clients were interested in the position.
I was going to ask about percentages.
Yeah.
Like 20% of the clients or so.
Yeah, back then. But I mean,
asking about it now.
Well, going forward, it could damn near be 100.
Right.
Whether or not everybody pulls the trigger,
it will be 100.
It might, guys are going to get a lot of business. It might be. Because we're already also seeing the first rounds of these things getting challenged. Right. So there's a court case currently out in New Mexico. There's a couple other court cases anecdotally we've heard about that have gotten settled outside of court, which is disappointing for the nerds like us because we want to see the arguments.
What? Yeah. So I guess what we're going to say is that like, so if I'm an operator, I'm a small operator, and we have a profit this year, we'd like to keep as much of the profit. We're fine paying taxes, of course, but we just want to be treated equally as a regular business. I hire you guys and I say, okay, I need this opinion. And I also, let's file it this specific way. You have the note in the thing. Cause I'm not handing them a letter, right? It's really just a note that summarizes kind of like the position.
You're disclosing it.
Yeah.
You're telling them you're not filing your return and waiting for them. And Ray, correct me if I'm wrong, and waiting for them to, get down to some schedule at the bottom and see if 280E is being applied. You're tacking on a disclosure form that the IRS has come up with for these types of uncertain positions, waving your hands up in the air and saying, I'm doing this.
Also,
not a wave. It's really just a subtle hand at the back of the classroom.
It's a little, yeah.
Or it's one of these like,
yeah. So there's two schedules too, so that people might see. So there's 8275 is a very popular one, as Jesse mentioned, because that's the baseline for everybody who's doing something like this. The larger companies, the audited companies with over $10 million that are corporate, they might have a Schedule UTP. And some of that gets into the nuance. Jesse kind of, gently talked about the idea of an uncertain tax position. You might see Schedule UTP as well, but they both effectively are going to do the same thing. They're going to say to the IRS, we agree this is an uncertain area. There's conflicting guidance. We've done our due diligence. We think we've done it correctly. We'd like to take this position, but if you want to come talk to us about it, we're letting you know up front that this is what we're doing.
And we have a team we've hired to help us.
Yep.
And this gets to your question, right? It's really just your classic cost, benefit, and risk analysis. You may have some operators who say, the IRS has come out and said, they don't agree, don't do this. We are Boy Scouts. We're already in an industry with a lot of risk. We're not going to do this, right? That would be like one end of the continuum of risk tolerance. No risk tolerance for something that's uncertain and a risky position. And the other, like Ray said, could just be the gunslingers who say, don't care, don't believe it. 280E is wrong. But what, almost every company is going to do is going to fall somewhere in the middle and is going to do it. A risk benefit analysis, right? If I have losses, right, I'm not doing it because I don't need to.
Yeah, right.
If I have $100,000 in net income, is that 280E savings worth it? Well, the opinion costs money. Withum costs money. I mean, you're filing a return anyway, so you're hiring Ray.
Other accounting firms do exist, but we would love for you to call us. Important,
But you're taking on all that increased audit risk. Right? And it may not be worth it. If you're saving $20 million, the risk-benefit calculation,
Right.
Or if there's certain scenarios where it becomes a lot more palatable to certain companies. You have debt that's maturing. You can't make payroll without keeping that. I mean, there's certain really grim financial realities.
Yeah, you could just close the business or you could take the opinion letter.
Well, and you haven't even mentioned, financing in cannabis has been so hard to come by. I mean, we've seen people have interest rates upwards of like 50% on short-term financing.
Yeah, there's crazy.
The IRS, if you lose all of this and maybe you average like 10% with your penalties and interest, there are some people looking at that cost benefit.
Right. And so that's the downside is, and we're going to get to this because I maybe want more specific example of this, but like they say, okay, you did everything. So you don't have to pay the 20% penalty because it was frivolous.
Probably
20%. Probably.
Hopefully not.
Hopefully not. You don't have to pay the 20% penalty.
Ray or I could never with a straight face say the IRS is categorically not going to do something, but the legal argument against the 20% penalty for the frivolous position, the way I was describing earlier, we think is strong.
Right. And so, because you did all the due diligence, right? So you did the work to make sure that this is a strong opinion and we believe in this as a company.
We believe it meets a reasonable basis threshold.
And so, but if they come back and say, we don't agree and we're auditing you specifically, then we have to obviously hire a team beyond that to support this. We have to pay an 8% or some percentage of it, 6 to 8%.
It floats. It's going to matter. It's going to matter what the underpayment interest is.
It's an underpayment, right? So it's like we file it and say, for example, we owe $500,000 and through after $500,000 under 280E and without 280E, we owe like $2.5 million, just to use round numbers. So
you're going to force me to show the world that I'm really bad at math.
Well, I'm trying to use round numbers. Math is a challenge most of the time. But basically, you're saying like there's a $250,000 spread between taking a 280 position or withdrawing it, or whatever you want to call it, like either under 280E or not under 280E. And if you're under 280E and you have a $500,000 bill, basically you're saying like, okay, we're potentially going to be, if we act like a normal business and don't have 280E, we're saving $250,000 in taxes.
Potentially. The statute of limitations for the IRS to audit you and claw that money back is 3 years from the date of filing. And we don't know how the tax court here or the case Ray mentioned, which seems to be, at least publicly, the furthest along in New Mexico is going to rule. We just don't know how this is all going to shake out. But your worst case scenario is something you want to game out and pencil in.
Right.
This not free cash that you're saving.
Some people are just escrowing it.
Yeah,
just escrow it.
And the public companies reported on, this is the first thing from my area of expertise, but as a contingent liability under financial.
So for GAAP, because GAAP has a slightly different threshold. So for tax, there's this kind of 40% threshold where we look at reasonable basis. GAAP, it's a 50%. It's more likely than not. So if you have a GAAP audit, everyone has to record this as an uncertain tax liability. It goes on the liability section. You would actually then, it might affect your P&L because you're really not going to reduce your income tax expense for the fact that you're paying less in tax. You'll still record that.
A gap here. So for a small your small operator, it's like I escrow it, like put it aside because if they come back, you have to have that cash available to pay that.
It'd be a good idea.
And so I'm trying to get like the all-in cost here. So it's like you pay for an opinion letter, which we don't have to disclose how much it costs. Obviously, talk to your attorney. And then you have to do the filing and put them, the memo in or note. And then you hold on to the cash that you potentially will still owe, but you're also going to owe on top of that, hopefully not the 20%, but maybe there's a chance still that the IRS is like, we actually think this is frivolous, and that 20% still gets tacked on. And then interest for the underpayment as well. So for the $250,000, there's a 6 to 8% floating number kind of interest payment because you underpaid for it. Are there anything else that I'm missing?
Well, I usually use 10 just because it's not just the interest, it's also the penalties potentially. Right. So kind of a round number, but it floats on a quarterly basis. Right. So 10's a round number, but somewhere in there.
And here's really where it comes down to, because you already mentioned the lawsuit. So when the IRS comes back and says, hey, I don't agree, you basically say you have two options here. You can pay the back tax or the underpayment with the penalties and everything, or you could fight it.
I mean, at its most simplistic level, yes.
Okay.
But it's not as simple as saying, we want a mulligan. We'll pay the interest. Go right ahead. You can try that, but the way and Ray and your firm is has much as more experience as ours. But the way an audit typically works is it's an unpleasant exam.
They go there.
They want to come. They want to look at books and records. They're reopening that return, not just on the 280E position, but on any other issues. So you want to think about, you want to game out the worst case scenario for what that audit could reveal. Do I want to increase my risk of an audit or not?
How do you measure that though? Because every company's different.
I got to be honest though. I would almost frame it a little bit differently. Like audits are routine. You've heard people say lawsuits in business are just part of doing business. Audits are part of doing business to some degree. So I don't necessarily want anybody to make, material business decisions based on just, I'm scared of an audit. Make a good business decision. And if we have to deal with an audit, we will. For instance, one of my clients yesterday, we had an audit walkthrough. Auditor came to their grow facility and we walked through. And the whole thing was about operations. It was educational. We didn't even talk numbers while he was there. He's trying to understand the business. A lot of the times what you're going to do is you're going to hire somebody like me, and I'm going to be your face for the audit. You hopefully will not even remember it's going on. I'll ask you for some information. I'll do the interfacing. It's an exam. Yeah, they're going to turn over some rocks, but we knew going in why we filed the return that way. We understood the numbers. We understood the strategy. We understood the risks. As long as you can do all that, you can still sleep at night, and you'll just, if anything comes up in the audit and they assess you at the end of it, you'll deal with it. Now, to your earlier point of how you deal with it, so there's a couple different steps, right? You get audited, you go through the process, there's an assessment. If you get assessed and they come in and they say, we disagree with X, Y, and Z, you then have a period of time, usually 90 days, to determine whether or not you want to fight harder, you want to negotiate, roll over and die, right? Going in, it's helpful to have that conversation, especially with your attorney. Are we going to fight to the death? What's that going to cost? All of that. It's important to note most of these firms are not including any kind of defense, right, language within their engagement letter for the opinion itself. The opinion for them is risky enough. Right. It is what it is. If you're going to fight to the death, then you're probably going to tax court. So tax courts, you're hiring a lawyer, you're defending it, you're presenting your arguments. And what we tell a lot of people is, if you're going to try and take this reasonable base position, there's a very low likelihood that you prevail in tax court. Just our opinion, but like tax court setting a brand new precedent, especially on a controversial topic like this, the odds are kind of low. Right. So at that point then, okay, you've now been hit twice with this tax bill effectively. What do you do now? Do you want to appeal? Do you want to lick your wounds and pay the bill? Were you unable to negotiate cents on a dollar or something like that?
Because you can negotiate it lower.
You could try.
Potentially.
Yeah, you could talk to them about solvency. If your company is going to go out of business without this position, you could, make arguments.
So a lot of choose your own adventure, and the decision to take the position and not pay 280E on your current year return is really the first step, and it can go in a lot of different.
It goes very broad at that point of the decision tree.
And then what's last just to hammer that home. Appeals, then you could try for the Supreme Court. So for anyone following around with counter provisions, right? They just attempted to go to that third level of this.
So that's what I was going to get to. But I think they didn't see it.
The Supreme Court declined to hear it, which I thought was very interesting because it seemed like Clarence Thomas, when standing akimbo, tried to get back in the game. His public statements about that were like, I want the fight again. I want to review it. So I've been optimistic that they would hear it. I was actually a little surprised when they just declined to do it.
So what's the one in New Mexico? How far is that one then?
Tax court.
That's in tax court, right?
Briefing.
Yeah, we haven't. I'm wondering if they're slow playing it to see if rescheduling moves along, to see if the decision's made for them. But I don't know.
So let's talk about let's tie it to, I guess, to the rescheduling now. Is it going to be retroactive?
Almost certainly no.
Rescheduling almost certainly will say this rule is effective on X date, which could be the date that it's published in the Federal Register, or could be some prospective date, 30 days, whatever. The question, would it be retroactive to prior tax years?
Yeah, could you do amendments because you were like, well, it's...
I don't think the argument really is any different than the current
opinion.
Because
you're doing it
which talks about the medical determination. That's my opinion.
I agree with
the question, I think, is the one that Ray mentioned earlier in the episode, which is Schedule 3, meaning no applicability of 280E, effective on the day of the final order, which could be December 31st, 2026, where you would get 1 day of benefit, or is it retroactive to January 1st of the tax year?
Right.
And there's I think, an open debate among lawyers smarter than myself, both at my firm and firms out there, and folks like Ray, who are brilliant on this kind of stuff, on the answer to that question.
Wow. So since the jury's out on that stuff, obviously because people are going to look for retroactive relief in some sense, whether it's to Jan 1 or whether it's just if there's any way we can go back to the old ones, because in our specific case, we were unprofitable for a really long time. So for us, we were like, all right, well, there's nothing to claim here, right?
Sure.
But now that we've gone profitable, now we're like, oh crap, now I know what everybody's talking about. This hurts, right? This is really painful.
It's
so
absolutely brutal.
It is a burden I had not.
An industry with so many headwinds at every step of the turn, whether it's cost of compliance or lack of access to capital, 280 is the worst.
It is.
It's the worst of all.
And then there's a couple different ways you could try and tackle that. There's some rules about whether or not you can just modify NOLs going forward. Those are very taxpayer friendly.
Modify what?
NOLs, if you have prior year losses, net operating losses. So what happens, you lose money in a year, there's no benefit to losing $1 million that year, but then the very next year when you're profitable, you say, okay, but I lost all that money last year. Net, I'm not killing it. Can I offset some of it? And the IRS and then the rules allow you to take that NOL and partially offset some of your income under the current rules. So if some things change, you could modify your NOL moving forward. As Jesse mentioned, the general rule is 3 years for the statute. It's actually the later of 3 years or 2 years after you pay a tax.
The later, yeah.
So the 3 year rule is going to control in most cases.
Okay.
There's also, depending on if you got a refund that was considered erroneous, there could be a 2 year modifier. There's also 3. It would be from when the IRS issued. They could try and claw it back if they thought it was erroneous.
2 years after.
So if you filed an amended return, something like that, got a refund, there's all types of statute of limitations.
There's all these different timelines. So I guess
there's a 6 year rule, which hopefully won't apply to anybody that any of us touch. So that's fraudulent. Well,
so has any of your clients crossed the 3 year finish line in a sense?
Everybody from the early years.
From 2022.
But you mean for the non-280 position?
Yeah, for the non-280 position.
Oh, none of mine.
No, because I don't think anybody was taking this on a current year return for 3 years ago.
Not what I was saying is if you went back and amended, and then you were and then attached the opinion letter and be that was actually in 2022.
So there is actually a strategy where you could do that. And it's interesting because I wrote an article with another lawyer who works heavily in the space where we talked a little bit about that. So amending your return doesn't necessarily bump out your statute of limitations, and not for another full 3 years.
Right.
So if you're within 60 days of it and you amend the return, your statute can still end at the 3 years. If you're within 60 days, the IRS, there are some rules that allow them another 60 days to review the claim. So you might immediately get an audit letter just because they want to keep their ability to chase you open. But so that is one strategy for people who might have a very low, risk tolerance, but are interested perhaps in leaving the door open.
So how far back can you amend?
You'd still need your original 3 year window to be open.
3 years.
3 years to amend, and also technically we're accurate. Oh, so that 3 years is kind of on both ends.
Technically, you can amend the return at any time, but you can only claim a refund for 3 years.
Okay, that's what we care about here.
Sure.
So in your experience and what you've seen in the market, has like how many, like, are you seeing those opinion letter companies, well, for lack of a better term, like their audits immediately like spike? All of a sudden, they're just getting audited way more than any other cannabis clients you have?
I'm seeing audits pick up, but they're not yet tied to the disclosures.
So generally speaking, they're about the same as it's the same risk as a normal cannabis operator right now.
I don't know if any of it's scientific. It's so anecdotal.
Okay.
I don't for current year filers in 24 and 25 who have taken this position on their current year return as opposed to amending. Again, the numbers are small enough of the folks that we know and work with in the industry that there's no statistical significance, but I don't think we've seen any giant increase in audit.
So for the ones that did get pegged with an audit, if you can think of, obviously not naming names, obviously, but the operators that did get pegged for an audit that also had the opinion letter, is the IRS's stance, you already said this actually, the IRS's stance is that we don't agree.
Correct.
And so have you had clients that had to write the checks to be like, oh crap, put this, this is your money?
Audit processes are still ongoing. That's one thing that may be a blessing or a curse, right, Ray, is that the audit process itself is going to take a pretty long time.
How long? Minimum of a year.
Minimum of 1 year.
Yeah, and a lot of the times they'll ask you to extend the statute for their own benefit. But yeah, what we've seen is the IRS is employing very conservative views when they audit cannabis companies. I mean, certain fringe items like abandonment losses, for instance, that could be argued if you just simply walked away from an asset.
Okay.
The tax code tells you can treat it like an ordinary loss as opposed to an exchange, like a capital gain, a capital loss. Like the IRS, for instance, has come in and said that's an ordinary loss, and 280E says no ordinary losses, so it's out. So things like that are just an example of how hardline they've been in our experience with how to put 280E into practice. So yeah, I wouldn't expect many people to have very favorable negotiations at that base level.
You're asking, Jason, about trends, and there is one trend that we think we've observed, which is amended returns. So in the early days, we definitely saw firsthand and heard, whether in public disclosures from public companies or otherwise from the small bar of other cannabis lawyers and accountants out there, that some folks, certainly not everyone, were having their amended returns accepted and were being able to claim the benefit of that no 280E position, whether through a refund check or otherwise.
So people actually were able to amend it with the note, with the opinion, and get a refund check.
Many. I don't know if a majority, but many in the early days. Probably not even a majority, I would say, but many in the earlier days.
Yeah, minority.
But enough.
Right, a meaningful amount.
That it happened. What we've seen recently, and Ray, correct me if your experience has been different, is that when folks have been, really in the better part of the past year, filing, amending their prior year returns and asking, claiming a no 280E position, the IRS seems to have developed some sort of a programmatic way of either rejecting that or take no action on that. And without getting too into the nuance, we're not seeing checks being written. So worry with that?
I do agree with that, but one of the things I'd like to engage you on to hear your opinion is I think there's still merit to continuing to do it potentially.
Oh, yeah. No individual tax advice. I mean, facts and circumstances are different for everybody, and there could be many reasons to do it or not to do it. And again, that gets into this complicated strategic and cost-benefit blender.
Right.
We have observed firsthand folks in the earlier days of this who actually literally got a refund from the IRS after amending returns, and we're not seeing that occur.
Yeah. But we talked a lot about statute of limitations. Putting your claim in while you're allowed to make a claim, there's some merit to that. It's still very uncertain what's going to happen at the end of the day with a lot of this stuff. I do have this fear that we'll come up with a bright idea after 3 years.
Yeah.
I want to do anything I can for the benefit of my clients, and the right client profile might still say, you should consider filing an amended return, even if you don't immediately get any dollars back.
Is there something that is, I guess, in your head's obvious that your clients, or just, I guess, operators in general, cannabis specific, should be doing right now?
Talk to your accountants and lawyers.
So just rely on the experts, basically.
Well,
for guidance.
Get the conversations going, and there's no time like the present to get the conversation going about this complicated risk benefit analysis of whether you want to take this position and for how many years and how and when and all the rest. It's funny. They seem to always have different angles to them. No two cases are exactly alike. The dollar amount at issue is higher. The risk profile of the company is higher or lower. The other ancillary considerations are higher or lower. Corporate structure is different. There's really
that's a big conversation that's got to happen. If rescheduling happens, are you happy with your current structure?
Well, I was going to say, is it beneficial to be in C Corp versus LLC versus whatever?
And I'm going to give everyone's favorite accountant answer. It depends.
It depends.
Yeah. And I mean, are you accrual or cash? What other do you have a million entities when you could be operating in one?
Right.
There's so many conversations that need to happen. And to Jesse's point, we can't sit here on a podcast and give one size fits all answer.
Yeah.
Depends what your company, and it depends what your goal is. Are you trying to exit in a couple of years?
Right.
Maybe blowing the whole thing up isn't a good idea if you're trying to exit in 12 months.
What about misinformation that you're currently hearing? Like, is there some kind of like threads of misinformation that's constantly getting regurgitated back to you to be like, hey, Ray, I heard about this, or Jesse, like, I heard about this thing, like,
well, rescheduling in December being one. Sure.
There you go. You got
not to pick on you. Sorry. Our gracious host, not to do that.
But definitely contributed to that noise.
I think people that think they can do this without disclosing the position.
That's definitely one. The not disclosing. Certain people too, I think that, because we spent years trying to talk to people about what's a proper inventory method. What can you actually defend? And this goes back to a myth that's semi-related, semi-unrelated. Like, this idea that 471C, that there's this small business get-out-of-jail-free card that meant like there were no rules. That's not like really a great defense posture if you get audited, and it's really not a good business practice. So that's another big one. Even if you potentially take a non-280E position, I would still tell everyone, here's your 10 cents of free advice. Like, 2 cents free advice? I don't know what that phrase should be. You should still fill out the entire rest of your return, still have all your other ducks in a row.
Right.
Because if you do have to defend it, I mean, you want the rest of it to be pretty good too.
Exactly.
Right? So I'd say that's another big one.
Yeah, so what I've heard there is, one, people are just being like, hey, we don't have 280E, but not filing a letter. Opinion, with it, right? Some people are just like, hey, it doesn't apply to us, and then they're just like,
a disclosure return.
Yeah, so they don't actually put the disclosure in there. So that was an interesting take. And then that 471C, I think I've heard that one. Is that the number again? 471?
Yeah.
So I've heard that one before too. It's like the get out of jail free card for small businesses. But you're saying that's not applicable. It's really, or is that something that you'd have to have a reasonable basis for again?
Well, so 471 is the code section that tells you for tax purposes how to calculate inventory based on your operation.
Calculate things, right?
And then 471C came about in 2017. They basically codified an old rule that said, well, if you're a small business, maybe you don't need to keep inventory. The cannabis industry latched onto that and said, we're going to calculate inventory. We're going to now do it without any of the prior rules or safeguards or anything. And there's an argument to be made there. We certainly saw some people come to us and they'd just blown the whole thing up and it was crazy. And we said to them, no, there's still this culture of how you should calculate inventory. And, if you want to have a good defense posture, if you get audited, it's good to have a good plan in place. So that's just one that, even if people come to us and say, hey, we're interested in the non-280 position. Okay, great. But let's also try and calculate your inventory correct in case everything goes wrong.
Right, exactly. Because then when they come in, they're going to want to see all the inventory.
Right. And we didn't really hit on this before, but I think everyone knows it, right? So 280 precludes your SG&A. You still get cost of goods sold.
Right,
It's
exactly.
pretty much constitutionally correct. If you look at like the Senate Finance Committee, when they talked about passing 280E, they specifically said, we can't attack cost of goods sold. We think that it'll blow the whole thing up if it gets litigated later. So everybody knows revenues minus cost of goods sold equals gross profit. That's your 280E taxable income.
Yeah.
Should have probably led with that an hour ago. Whoops.
Is there so I'm more of an optimistic person. Let's say it all gets done. All of a sudden, I'm talking to you, Ray, and I'm like, hey, all right, let's go. No 280E, awesome. Please file it like a normal business in 2026. Is there another kind of ruling out there that kind of replaces 280E as like the next level of pain for operators? Like, is there anything else we'd want to see changed potentially, or some big thing on the horizon? They're like, oh, now this is the next problem we have to kind of face.
So I think there's a question for Ray on what like discretion or guidance the IRS could put out in a post 280E world that would, when you're making certain calculations. I will just say one, that there's a bill that's been introduced in both the House and the Senate, and it's one of these like kind of backbencher bills that only has 2 or 3 sponsors. So I wouldn't, of all the things I would lose sleep about, this probably isn't one of them. But there is a bill that's been introduced in the wake of rescheduling discussion to apply 280E's prohibition on deductions to cannabis companies, regardless of whether it's put on. It's cannabis that much in Congress. But that's one thing that I would keep, just maybe the corner of my eye on. But I think there's probably a lot of gray area for the IRS to interpret certain things, right?
I mean, there's nothing that's quite 280E. Jesse's right on the ball with that. There's certain people who are trying new angles to make sure it's a bad thing forever. I think we anticipate, too, that there will be some excise taxes that'll pop up. You talk about like the types of taxes that hit the alcohol industry. You still have cannabis as a vice product. There's still likely to be some kind of revenue raiser on it. I don't think that the federal government's optimistic enough that just pure legalizations.
I was going to say, they're not going to want to like give up that revenue.
No, right. No, so every IRS audit yields 3 times the amount of revenue than any other audit. Like, they don't want to give it up. 280 yields a ton of
that money.
Yes.
So
probably be some kind of tax,
use it excise, because I mean, there's excise taxes on so many things at the federal level.
Well, that would have to pass Congress, though, right?
I'm sure, but they'll probably tie it to rescheduling at some point, I would think.
I don't know.
I'd tie to descheduling if it gets done.
Descheduling is a very high bar. It really is.
But that'd be
to go from Schedule 1 to nowhere would be.
No, I'm saying if you go from Schedule 1 to Schedule 3 and that gets done, and like next year someone puts a bill out there that says deschedule, and everybody's like, actually, Schedule 3 wasn't that terrible. There's medical benefits to it. Let's go full on to deschedule.
One thing we haven't talked about, though, I mean, Schedule 3 is probably going to present just a new set of challenges from a regulatory perspective.
Depends. A lot of people are talking about it. I think it's maybe a topic for another podcast, but there's an ability for the FDA to step in the space in a way that they haven't before.
That's right.
I doubt they will, quite honestly. They determined that they couldn't regulate CBD without congressional action, which is sort of an analog to what might happen under S3. There's certainly no sort of preemption that occurs by the rescheduling under the Controlled Substances Act that would disrupt these little state laboratories that we have in state programming. I don't think you're going to see, some people are talking about DEA licensure, which is
definitely something we've looked into.
It is. Yeah, which is not actually as ominous and scary.
It's actually easier than the CCC.
Yeah. Oh, yeah.
So hold on. What, are we comparing apples to apples, though?
Yeah, exactly. No, when I looked at the DEA stuff and I was like, oh, it's like 3 weeks. And it took me 18 months to get my license. And they can just fly through here and be like, all right, they can send an inspector in here. They can check everything off. Because we've even looked at, because if it goes Schedule 3, we're like, okay, the natural thing that follows in my head, which I guess steal this if you want, but it's not a good strategy, I don't think, is if you're a licensed operator being like, okay, if you can segment or somehow put up a wall and say this is the DEA Schedule 3 side of things, have the DEA come in, blah, 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 find a distributor in pharma, go to CVS, go to Walgreens, but then you have to talk about Walgreens. And, like, there's nobody's
that ever from that happening. If we have Schedule 3 tomorrow, you're so far off. I mean, I think the changes.
Well, the FDA part of it is a big part of it also, because it's like it technically can't be. You'd have to go through the FDA process to do all that potentially. It's Epidiolex and all the other stuff.
Right. Clinical trials and everything.
Yeah.
Formulation.
It's a so far off.
With flower, botanical. It's really.
People are shopping at CVS for their. And now you're not shopping anymore. You have to get it prescribed.
I'm assuming.
But that's how weeds ended the final episode. I mean, I was promised that I could buy dog walkers in CVS, right?
I mean, what an interesting digression and a route to go down, and
that's a bigger topic. And you're coming back next week. We're doing.
But yeah, but I think anything other than just some incremental changes, maybe you would get uplisting on the exchanges, maybe you'd have a lot more banks. I think there's a lot of I think you'd see far more movement on the commercial side than you would on the government regulatory side. Bottom line is Schedule 3 doesn't really change the status quo. What would be what you're talking about, which is programmatic, regulated framework for cannabis with taxation, with federal preemption over certain state rules, common labeling, packaging. Some sort of a big legalization bill passing Congress would be the next major point of inflection and reform. And, I don't want to end this on a down note, but Congress can't get together to name a post office. I don't see legalization happening in this current political environment.
And there's one specific champion at the top who's going to push it through. But then
there are a couple of people whose names always seem to be up on the bills. But
I mean, if you look at what happened with the Farm Bill, it was an accident, perhaps, in the first writing of it, as that in must-pass appropriations legislation, right? And then the quote-unquote loophole was closed this year in must-pass appropriations legislation. So it seems like the only legislating in the area of cannabis and hemp is when Congress has a gun to its head and they just slide some spending bill so the lights stay on.
Right. So that's hilarious. So yeah, it's funny because I actually think the word loophole is super interesting now in my head because it's like the Congress knows what it means and it says those things. So like clearly it knew what it was doing.
Well, and that's what the courts decided. The courts read the plain language of 0.3% THC on a Delta 9 THC on a dry weight basis, right? Delta 9 only, dry weight basis only. And
the word derivative, though. The word derivative being in there, I think, was huge. What you did with it afterwards, right?
Showed an intent that there could be,
like downstream products.
Downstream products.
So they knew what they were doing when they did that.
I think, with the exception of Mitch McConnell, who did not seem to know what he was doing, who spent 5 years then trying to put the genie back in the bottle. Yeah.
Language matters for it. So now you have total THC in the 0.4 milligram container limit, right? So language matters. And to we were callback, right? The language matters. May matter if it's different in 280E than it is in the Controlled Substances Act.
So just I had to say it because it was up top of the head because we said the word loophole, which can trigger people. As we wrap, though, I guess I kind of do want to call back to that, like, this is 2026. We're still in January here. When this airs, who knows? It'll be probably February. We'll get it done quick because I think this is really important to get out there as soon as possible. But as we wrap here, is there something that operators need to be like paying attention to today besides just like talking to your local professionals?
I mean, the number one thing is, having a plan in place. And kind of like not just a plan for tomorrow, right? I mentioned exit strategies. Right. What decisions are you making today? If rescheduling happens, if it doesn't happen, if you're still doing this 5 years from now, right. I mean, that's the number one thing. And then just make sure that you continue to have your team in place. If you're not feeling confident, your lawyer, call the right guy, call another accountant. So many people who are still flying by the seat of their pants, even making $100 million in revenue in cannabis and flying by the seat of their pants. Right. It's a business. It's a hard business.
Man.
Treat it like a business. And then cross your T's, dot your I's, make sure you have somebody on your team that's paying attention to regulatory. And yeah, I guess that's the last note.
Yeah, that's good, Ray. Jess, anything or just reiterate?
I wholeheartedly agree with that.
Yeah, have a plan, because if you don't have a plan, then you can't make those decisions in real time. If it does happen, you're like, what do I do now?
No. And don't skimp on the accounting. If you don't have good financial information, it's hard to make good decisions.
You can't make this good decisions.
Hire Ray.
This whole thing.
Perfect.
Ray Owens.
Thank you so much, guys, for coming on. It's been an absolute blast. I learned a ton, and you definitely straightened it up in my head a lot of like how this all works and how it's all going to unfold potentially. So
We did.
I think, because I think
We were kind of stumbling through.
not unfold, but I more mean that how the process actually goes.
Just being a smart.
And so, but I think for many people, you should try to bookmark this and like rewatch this one or re-listen to it, because I think this is going to be very valuable for the future. So make sure you're paying attention. And I reiterate those words as well, Ray. That was nicely said. Have a plan. Perfect. Thank you, guys.
Thank you. Thanks for having us.